Hello, my name is Brad Halverson, Caterpillar's Group President and CFO. This morning we reported financial results for the first quarter. A few months ago, when we released our outlook for 2013, we said the first quarter would be a challenge, and it certainly was. Sales and revenues in the quarter were $13.2 billion, down 17% from the first quarter of 2012. Profit was $1.31 per share and down $1.06 from last year, due largely to the decline in sales. While there's no doubt that customer demand has softened, primarily in mining, much of the year-over-year sales decline was the result of dealer inventory changes. Last year in the first quarter, dealers added about $875 million of machine inventory, so our sales were higher than end-user demand. This year, dealers started the year with more inventory than they needed. They took out about $700 million in the first quarter, and as a result, our sales are lower than end-user demand. We've responded by taking action across the company to bring down production and cost, realizing a solid first quarter. While it was a tough quarter for sales and profit, the balance sheet continued to improve, and operating cash flow for machinery and power systems was about $900 million higher than the first quarter of 2012. As a result of our strong balance sheet and improving cash flow, we announced this morning that we will begin repurchasing Caterpillar stock in the second quarter. With the recent decline in the stock price, this is an opportune time to do it and reinforce our confidence in the long-term future of Caterpillar. In this morning's financial release, we also revised the outlook for 2013. We now expect 2013 sales and revenues to be in the range of $57 to $61 billion, with profit per share of about $7 at the middle of the outlook range. That's down from the prior outlook of sales and revenues in a range from $60 to $68 billion and profit of $7 to $9 per share. The main reason for the lower outlook is mining. Mining customers remain cautious and have reduced their orders for new equipment. What's currently happening in the mining industry today contrasts in many ways with what we are seeing in the global economy. World economic growth seems to be stabilizing. Commodity production is up, and most mined commodity prices, while off their highs, are at historically attractive levels for continued investment. With these fundamentals in place, you would expect demand for mining equipment to be strong. However, many of our customers, after several years of robust growth, have cut their capital plans for new equipment in 2013. We remain very positive on the mining industry for the long term, but it's clear that 2013 is going to be a challenge for our mining business. As we take action to lower production and cost in line with our sales outlook, we understand that it's tough, and there are difficult choices along the way. However, our ability to be flexible and react to changes in the marketplace is key to our long-term success. We are confident that when conditions improve, the steps we have taken will leave us well positioned for continued industry leadership. Over the last 3 years, Caterpillar has done a great job of managing cost and delivered results in an environment of increasing volume. We have executed well, delivered on our commitments, and invested for the future. For that, I thank you. We are now at a point in 2013 where the world is watching to see if we can deliver in the face of declining volume. And they can watch because we will deliver. In closing, thanks to our customers who make our jobs possible, and to the dealers and suppliers for a great partnership. You can find more information about our first quarter 2013 results in our financial release, which is posted in the Investors section of our Caterpillar.com website.